You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 3rd day of June, 2024. Thanks so much for joining us. Whoever you are, wherever you are, just glad to have you right here, right now. Now, I've got some articles to share with you, but these just popped up in my feed, and I'll just give you the headlines. The U.S. government plans to launch heavily criticized federal ID program. And Biden unilaterally grants mass amnesty to 350,000 foreign nationals. So, I haven't read those articles yet, but they're out there. You can check them out. But again, welcome. Happy Monday. Now, we do 2 live broadcasts every trading day. First one, that's our live trading room. That's for members only and those taking their 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com, and at the very top of the page, there's a link. It says 5-day free trial. No credit card required. Now, we all know nothing's free, right? Same's true here, but it says free trial, no credit card required. That's because we foot the bill. The time, the energy, the expense, the bandwidth, all of it. Because we want you to have a clear head for 5 consecutive trading days, so that at the end of the trial, you can make a well-informed, intelligent decision as to whether or not trading is right for you. So, for you, it in fact is free. But you got to show up, you got to ask questions, or else you will have wasted your 5-day free trial. So don't do that. Now, to take the trial, you just go to mytradingiq.com. Once again, click that link at the top of the page, fill out the registration form, hit submit, and typically same day, we'll get your indicators turned on, get your desktop set up, and then your trial will begin the following day. So you're thinking, today's Monday, that's not going to start till Tuesday. I'm only going to get 4 days. Not true. What will happen is that 5th day will be next Monday. So actually, you'll get 7 days instead of 5. And you might think, well, gee, the indicators are no good to me over the weekend. Some markets never sleep. So, in fact, they are. Now, once the live trading room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for the afternoon broadcast, this broadcast. There's 2 different ways to join the afternoon broadcast live, because this is open to the public. Everybody everywhere on planet Earth with an internet-connected device. The best way, because you only have to do it once, just go to mytradingiq.com. Scroll down the page this time to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. Inside that email, there's a link. at 12 noon Eastern, all you have to do is click the link in the email and it will automatically log you into our platform. Now, the benefit there is you'll have access to the question box so that you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from your desktop, but you still want to join live. You can. And there'll be days when you're just busy, can't join live, but want to get caught up later. You can do that too. Talking about our YouTube channel, youtube.com/CFRN. youtube.com/CFRN. It's real easy to remember because you already have the YouTube part memorized, so just got to remember this, CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,500 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. Okay, we'll open with our daily devotional and a word of prayer, as we do every day. Then we'll get into the markets. Then about 12:45, 12:50, Michael will join us, give us a recap of what happened in the live training room this morning. Then we'll go live on the TradingView platform for 30 minutes, do some live trading, and then I'll wrap things up with our good word for the day. We're starting a new topic today, passion. Now, today's scripture, Romans 8:38 through 39. For I am convinced that neither death nor life, neither the present nor the future, nor any powers, neither height nor depth, nor anything else in all creation will be able to separate us from the love of God, that is in Christ Jesus our Lord. There's a popular song called Passion. One of the lyrics says, "Your love never fails, never gives up, never runs out on me." We all want to be loved. Whether it's the stories and films or novels that we become wrapped up in, the longing for community, or the hope for intimacy with a potential mate, we all long to experience love in one form or another. Yet in the search to find love, we're often left with the taste of love lost. Our heart is never neutral. It's ever softening or ever hardening. When we're reminded to guard our hearts in Proverbs, it's because our hearts are always affected by the choices we make, by the love that we find and the love that we lose. Perhaps the story sounds familiar of a person spurned by a lover, maybe let down by a community, or just left brokenhearted by someone close to them who swears then that they will never let it happen again. They're speaking the language of the heart hardening. Love has been lost, and it hurts. While the scriptures remind us of the beauty of love, it also recognizes that love in a fallen world will seem broken at times. Biblical heroes also find the bitter taste of betrayal and distrust, of unrequited love, of hearts held out and left wanting and waiting. But Paul also reminds us in Romans 8 that love remains worthwhile, and that there is one who provides the all-encompassing, truly unconditional love we're all seeking. There's one great love given to us unconditionally from the God of all things that will never leave us in the familiar despair of a love that lets us down. There is no end. There is no circumstance within which that love can be exhausted. It is by definition true love. We're all sinners who have fallen short of the glory of God. But He still loves us and always will. Nothing you or I do will ever change that. If you feel alone, remember that God is with you. Let His love make you strong. Let His love remind you that you matter to Him. Let His love begin to open your heart again. Join me in a word of prayer. Heavenly Father, we thank You for the promise in the scripture we shared today from Romans, that nothing can separate us from Your love. Help us to live in the assurance of Your unending love and grace. Strengthen our faith and remind us daily of Your presence and unwavering commitment to us. May we always trust in Your love through every circumstance. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. And happy Monday. Yeah. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Some weird stuff going on out there today. That's one of the articles I'm going to share with you. Berkshire Hathaway fell 99.9% based on some market glitch. One of our guys in the live trading room even tried to buy a share. Berkshire Hathaway was down 99.9%, which put its stock price at $165. I think it normally trades somewhere around 30 grand. But anyway, right now the Dow, remember this is the cash index, the Dow is down 338 points, almost 1%. NASDAQ is down 12 points. S&P 500 is down 25. The Russell 2000 down 6. And in the commodity basket, crude oil, man, down $2.58, trading 74.40 last. That's a drop of almost 3.5%. Gold up $17, trading 23.63 last. Silver up 22 cents, trading 30.66 last. Asian markets at the close, the Nikkei posted a gain of 435 points. That's over 1%. Shanghai dropped 8 points. The Hang Seng gained 323, which is 1.75%. And in the European markets at the close, the FTSE dropped 12 points, while the DAX rose 110 points, and the CAC gained 5 points. So we had a mixed day in Asia, mixed day in the UK. At the moment, it is a red radio Monday here in the US of A. And in a moment when we go to the charts, you'll see why that makes perfectly logical Okay. Now, which one of these articles? Well, we'll just start with this one. I only have 3. We'll rip through them real quick. GameStop, which has been back in the news again due to Roaring Kitty, trades under the symbol GME, surged on Monday after user its deep F and some stuff I can't say on the air value. It's actually a member on Reddit, an account believed to be tied to individual investor Keith Gill, who is Roaring Kitty, who ignited the same meme stock rally back in 2021, posted a screenshot on Reddit late Sunday that purported to show they paid nearly $175 million building a position in the video game retailer. The user posted the screenshot Sunday night on Reddit's Super Stonk subreddit. GameStop gained as much as 75% at the market open after doubling at one point during pre-market trading. Near 10 a.m. Eastern, the stock was up closer to 35%. The screenshot showed holdings of 5 million GameStop shares purchased at an average price of $21.27, a position worth $115.7 million as of Friday's closing price of $23.14. GameStop shares traded hands at $38 each in early trading today before they were temporarily halted for volatility. The account also appears to own 120,000 options contracts that expire on June 21st. These contracts confer the right to buy GameStop shares at $20 each, a position worth $65.7 million as of Friday's close. And we're higher than Friday's close now. One of the chief strategists at Interactive Brokers warned investors against chasing the rally. Is whoever controlling this account doing this in your best interest or in their best interest? And really, you should think that one through, because to me, it's pretty obvious whose interest it's in. Now, that's what this strategist, Steve Sosnick, told Yahoo Finance on Monday. If you're chasing the stock up here, you're more likely than not the source of liquidity for whoever is controlling this account to sell into your enthusiasm. Now, today's surge came after GameStop rallied 180% over a span of 2 days back in mid-May after Roaring Kitty posted for the first time on Twitter since 2021. Last month's rally was short-lived, as analysts warned the meme action this time was a far cry from the level of retail inflow seen in 2021. Still, GameStop capitalized on May's rally. Last month, the company sold 45 million shares, bringing in around $930 million in proceeds. The stock surged 25% on that news. Typically, investors would expect the stock price of a company issuing new shares, which dilutes the value of current holdings, to decline after a stock sale. AMC also capitalized on the meme frenzy, raising $250 million through the sale of 72.5 million shares last month. AMC shares were up about 10% this morning. So I concur, be very careful. You don't want to be somebody else's liquidity. I'm not saying it can't go higher. I'm just saying be careful. A technical glitch on the New York Stock Exchange this morning showed incorrect stock prices and volatility halts on several stocks, most notably a 99.9% drop in the price of Warren Buffett's Berkshire Hathaway A shares. Berkshire Hathaway B shares, which trade at 1/1500th the price of the A shares, were down as much as 1.1% and appeared largely unaffected by the error, though volatility was pronounced in both issues as A shares reopened for trading near 11:35 a.m. Eastern. A technical issue with industry-wide price bands published by the CTA SIP triggered halts in a number of stocks listed on the NYSE Group exchanges this morning. Price bands prevent outsized volatility or extreme movements in an individual stock. The New York Stock Exchange said the impacted stocks have since reopened or are in the process of reopening. Chipotle was halted. One of our members in the live training room owns Chipotle. Now, Chipotle was halted, and it was only down 1.2% at the time they halted it. Horace Mann Educators and Franco-Nevada Corp., a gold-focused royalty and streaming company, were also temporarily halted. Monday's technical glitch comes days after the disappearance of live calculations for the S&P 500 cash index and the Dow Jones Industrial Average for about an hour. About a week ago, the New York Stock Exchange began settling stocks in one business day to comply with a new rule from the Securities and Exchange Commission. At the time between a trade and settlement decreased from 2 days to 1 day. So that's the story behind that story. And they had an election in Mexico. Mexican assets tumbled after preliminary election results showed the ruling party winning in a landslide that may empower it to increase state control of the economy and undermine checks on power. Peso led global losses, sinking as much as 4% before trimming its decline, while swap rates climbed and stocks slumped today. Official projections showed Claudia Sheinbaum, the protege of President Obrador, winning by at least 30 percentage points. While her win was largely priced in, the quick count published by the Electoral Authority also pointed to the ruling Morena Party and its allies winning a so-called supermajority in the lower house and clinching at least a simple majority in the Senate. More support than polls suggested. Investors were closely eyeing the congressional races as a two-thirds majority would give the ruling coalition a mandate to pass more ambitious reforms that could change the Constitution. The congressional results will determine if Morena will be in the position to pass a swath of proposals made by Obrador in February. Those bills include plans to reduce the number of lawmakers and allow for the direct election of Supreme Court justices. They also include eliminating independent regulators like the Antitrust Commission, as well as establishing new pension obligations and mandatory minimum wage hikes. Such an outcome could sap appetite for Mexico assets, including the peso, which has been one of the top performing major currencies this year against the dollar. Peso has defied calls that it's overvalued and has continued to rise. Mexico's close ties with the U.S. shielding the currency from the strong dollar that has roiled other developing nations. I also posted last night in the discussion group, keep an eye on China. I suspect over the coming weeks we may see some currency manipulation there. I'll give you more details as I have them. Now, let's go take a peek. Logic 247. Now, last week, week 304, we had a total of 42 alerts issued, 4 never triggered. That gave us 38 actionable alerts, of which 0 stopped out. We closed the week without a single stop out. Well, we knew that couldn't last forever, right? Of course not. So, oh, what just happened to my Telegram? I think my Telegram just choked up on me. That's one thing I rarely have problems with. Oh, there we go. Now it's back in shape. So last week, 0 stop. That's highly unusual. What we've averaged over the last, well, here, let me just show you. Show you where we're at today. Oh, I see what's happened. Telegram has changed something. Okay. But it'll still work fine for our purposes. We're now in week 305. Over the last 305 weeks, we've issued over 16,800. That's 16,800 individual handcrafted alerts. And what we've averaged over the last 304 weeks is 20% or less of the alerts being stopped out on a weekly basis based on market structure and a simple process that we teach all of our passport holders. Now, finishing the week last week with 0 stopped out, okay, that's a huge anomaly. Here we are on Monday, and since the markets opened last night, Valerie did this recap this morning at 7 a.m. Eastern. She'll update it this afternoon. I've put out additional alerts since then, but at the time she did the recap, we had 9 alerts issued, still waiting on the outcome of 4. 5 actionable alerts, of which 1 or, there it is, 20% would have been stopped out, again based on market structure and that very simple process that we teach all of our passport holders in their one-on-one private mentoring sessions. Now, 305 weeks is a very long time. However, our original alert service, Concierge Trade Alerts, is probably 2.5 times that old. I know, it's a lot, right? Now, the purpose of the alerts is not just so you can trade them and not have to worry about learning how to trade. They're actually a tool to help you learn how to read the chart. If you're trying to learn how to trade, you've got to be able to read that chart like a newspaper or a good mystery novel. You have to understand what it's telling you, okay? And until you learn that, it's just chaos. And you're just trading on hopes and dreams. What you're doing is you're gambling, okay? You've got to learn to spot what the next high probability move is. If you'll use the logic alerts, Whenever one comes out, just draw a horizontal line on your 30-minute chart at the entry. Draw a horizontal line at the initial target. That's good enough to get your goal for the day. Then draw a horizontal line at each additional target. And then if it's a long, the final trade to target will be the weekly zone above. If it's a short, the final trade to target will be the weekly zone below. If you'll do that with every alert that comes out, after 2 weeks, you won't even need to look at the logic alerts. You'll understand how to find the entry, the initial target, the additional targets, or obstacles, however you want to look at them. Now, the CTAs are a little different, okay? With the logic alerts, I look left for you, teaching you how to look left yourself. CTAs, you get to look left yourself as you move up the food chain. Now, apparently, I forgot to change this yesterday. Here, let me make sure. Yeah, 5:30 was Friday, right? Yeah. Oh, yeah, that's right. Okay, I just didn't change this part. I didn't change. S-U-N. There we go. Okay, these were published last night at 6:10 p.m. Eastern. The CTAs are always published shortly after the Globex Open, which is 6 p.m. Sunday through Thursday. Tonight at 6 p.m. Eastern, it will become the Tuesday session. The Monday session will end today at 5 p.m. Eastern. Okay. So when the report is published, now the logic alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. CTAs are published once per session, and it's a static report. First thing you want to do when the report comes out is go to the 30-minute chart of whatever markets you trade and make note where price is at the time the report is published. It's always going to be between these two numbers. Then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. Price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's trying to reach the short target. It's pretty simple. Now, with the CTAs, this is where you start to look left yourself to spot potential obstacles. You swing highs and swing lows that let you know where the next target/obstacle should be. And you'll learn how price behaves at a weekly trading zone. Price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night until they close Friday afternoon, if price is above the 30-minute BBC, it's trying to reach the zone above. If price is below the 30-minute BBC, it's trying to reach the zone below. We've published the zones since December 14th of 2009, closing in on 15 years. They come out Monday morning, 6:15 a.m. Eastern for our members and trial members. And once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. BBC simply stands for Bull Bear Cross. It's the green line you see on all my charts. When price gets above the green line, we're bullish and anticipate higher prices. When price gets below the green line, we're bearish and anticipate lower prices. Always relative to whatever time frame you apply the indicator. Daily, weekly, monthly, 30-minute, 5-minute, tick chart, range chart. Concept is the same. Bullish above it, bearish below it. Just resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. And today was just such a day. Okay. Let's tighten this up a little bit. There we go. Now, on Friday, we managed to close just above the step line, which told us we had potential resistance at red and falling. And we hit it, and look what we did. We dropped below the 24% fib retracement of the last leg up. The low was put in April 19th, the all-time historic high, May 23rd. Now, we've dropped below the 24 once, and then we dropped again down to the 38. And then we bounced. We got, I mean, what an incredible bounce off the 38. 52.12. Now, if you were following in the discussion group on Friday, I walked you through all of this. I said at 52.12, expect a bounce. And from 52.12, we bounced all the way up to 53.07. Now let that sink in. From 52.12, we bounced to 53.07. That's almost a 100-point bounce. But we expected resistance at red and falling. And what do we get? So far, resistance. We're a little bit off the low of the day. Okay. What's really important is we need to take out. Now, this was Friday's candle. Okay. We need to take out Thursday's low, which was 52.38 and a quarter. If we take that out, then that should take us back to the 38. Once we crack the 38, the 50's down at 51.65. Now, you might wonder, why are you looking at a daily chart? Because I want to see what the institutional traders are up to. They have the deep pockets and trade in size that actually moves price. So if I look at what they're doing, I just peep over their shoulder and see what they're doing, guess what? I only have to do what they're doing long enough to get my goal for the day. And on a day like today, it makes it pretty simple. Okay? Trading's not easy, but it can be simple. Now, that doesn't just work with the S&P 500. It works with any market, any futures market, any individual stock, crypto, Forex, ETF. Price flow is the same across all markets, all time frames. And when you look at the day, see, institutional traders, because of their account size, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. If you'll teach yourself to spend 2 minutes with the daily chart before you start your trading session, over time, you will see your results improve substantially. Now, these are last week's zones because all the alerts that go out on Sunday night are based on last week's zones, because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. So the alerts I issued this morning are based on this week's zones. But the ones that went out last night, like these, are based on last week's zones. Tomorrow on this broadcast, you'll see this week's zones on my chart. The vertical line separates today, Monday, which began last night at 6 p.m. Eastern. Back over here is Friday. Okay. When price rallies up to a zone, we expect resistance. When price drops to a zone, we expect support. See, support, resistance, support, resistance, support, until proven otherwise. In other words, we finally broke through. Okay. Now, see this area right here, this bullish cross, 52.50. It's a really important area. If the market continues to drop, you should expect support right where that bullish cross is. While we didn't make it to the long target, there was plenty of opportunity to get your goal for the day on the upside and on the downside. On the down, this is where we opened last night. We ran right up to the long target. Then we pulled back to the BBC. Now the pullback holds more often than not, like this. It held and it held and it held and it held. Eventually it will trade through. I put a comment in the discussion group last night. I said, guys, I think the markets are getting ready, the indices are getting ready to pull back. And I anticipate that this time we're going to trade through. We caught a bounce on the ES, but then we traded through. On the Dow, we just traded through. And then the pull up held, and we continued to drop. Zone to zone. On the Russell was a wild man today. It's been very volatile the last few days. Here's where we opened last night. Ran right up to the long target. You only need 2 points. I mean, we opened at 2078. So let's say you waited for this candle. 2083. To the top of that candle. It's 28.8. That's 5 points in that candle right there. 5 points. You only need 2 points to get your goal for the day. So price pulled back to the BBC. The pullback held. We went to the zone overhead, 2100/2101, which we expect to be resistance, and it was. Then we traded through the BBC, all the way down to the zone at 2060/61. Now, you'll see this low here came right above this bullish cross, but then this candle traded through it. Sometimes that will happen, but it's unusual. So where's the market finding support? At last week's zone, 2060/61, at least for now. See how the step line is starting to slant to the right? When the black step line crosses red and falling, then you should anticipate price retracing to the BBC. When the step line crosses blue and climbing, see how the black line's on the left side of blue and climbing? Then it crosses to the right side, expect to pull back to the BBC. It's so simple. Not easy, but simple. NQ. Here's where we opened last night. Came down to the zone, found support. Ran up to the zone, found resistance. And in the process, hit the long target. Then we spiked this zone. And this high was put in on Thursday. Now the fact that we weren't able to take out this high was a sign of weakness. So we get a leg, trade through the BBC. We get a retracement, and then another leg down. And where's the market finding support? Right at the bullish cross. Happens over and over again and again. If you remember, you have the indicators. Man, price drops to a zone, expect support. When it rallies up to a zone, expect resistance. Over and over, again and again. Let's see, that's the indices. Let's go to crude. Now, crude has had a mighty fall. I mean, we're flirting with the lowest weekly trading zone on a Monday. We haven't got there yet. Still got to drop another couple bucks, but this is where we opened last night. Consolidated at the zone. That's what'll happen 70% of the time. Consolidation, consolidation, consolidation. 20% of the time rejection, 10% of the time slice. So from the zone, we bounced up to this high from Friday. That resistance set us looking for support, which we found at the zone. And then that bounced us back up this area right here. See it? Back down to the zone, another bounce. So you see you got a high, a lower high, a lower high, a lower high. That's just saying, man, the bottom is about to fall out. Logically, okay? Does that have to happen? Does it always happen? There's very few always in the world of trading. But when you find something that happens more often than not, that's where you make your money. Resistance at the zone, support at the zone. Now see how the step line is starting to hook to the right? Once it crosses red and falling, look for price to rally back to the BBC. Gold, we're now on the Q contract. This is the open last night. It ran up to the BBC, which pull back holes more often than not. Call it a pull up if you want, but it's a retracement. Price always reverts to the mean. In our case, the mean is green, and it's called the BBC. Bearish below it, bullish above it. All alerts are created on the 30-minute chart. So down we come to the short target and consolidated the zone. Then we get above the BBC and we make a run. And where do we get our first resistance? At the previous bearish cross. Spiked it a little bit. Then we hit the zone to the tick pretty much. Keep in mind these are last week's zones because these alerts and targets all went out last night. Everything issued this morning is based on this week's zones. And so tomorrow on the afternoon broadcast, you'll see this week's zones on my chart. So this is a zone that was published a week ago today. And look, it's still doing its job. Still doing its job. Drop to a zone, support, rally to a zone, resistance, consolidation, a leg, a retracement. See, this resistance became support. Now we're up against the resistance of the zone. Michael, did I hear you there? Thought I heard him. Okay, we're on silver, where it only takes 2 pennies to get your goal for the day. Here's where we open, right at the zone. And we drop to blue and climbing, which is support. Set us up to the VBC, resistance, which sent us down to the short target. We spiked the zone. Buyers, if you go look left, you'll find out why. Buyers came in, drove us up, got us above the BBC. There he is.
Here I am.
All right. All right, guys. That's the silver. And on the euro, we opened and dropped to the short target. And then buyers came in right off this bullish cross right here from Friday and drove the market through this zone. Now we sliced the zone, sliced through it, and then look what happened. We retraced. Three things happen. Consolidation, 70% of the time, 20% of the time rejection, 10% of the time the slice. Here's the slice. It ran out of steam. We retraced to the zone that we sliced through, found support, then ran to the zone overhead. Over and over, again and again, day after day. And we talked Friday about the bounce off the 38. We got a 100-point bounce. But then we hit resistance at red and falling, and now look where we are today, back before the 24% dip. Okay, Michael.
All right.
I'm done.
Here we go. All right. I will bring it over. Here we go. There we go. All right.
Okay, looks
Should
good.
be looking at my screens. Good. Here we go. Good afternoon. Oh, let me open up this one other thing. Good afternoon, everyone. Today is Monday. Hang on. That's what I was trying to open. Okay. Today is Monday, the 3rd day of June, 2024. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here to sign up for the free trial. When you click on that, you'll be brought to this registration page. On this page, all we ask for is your name, your email, your phone number. Down here at the bottom, if you have Ninja, give us your machine ID. If you have TradingView, give us your login ID. All right, your machine ID is not your Ninja ID, and your login ID is not your email. So give us that information if you can. And we will enable the indicators for you so you get rolling right at the beginning of your trial. All right. And now, with the spreadsheet, we had kind of a lackluster start to the day today. I don't know how we got a blue thing in there. Let's delete that row. We had kind of a lackluster start to the month today. We did get the goal for the day after 25 minutes of 4 trades. Now we switched to 18 contracts today because we're on the 18th month in the 24/20 blueprint. And this morning, it took us 25 minutes and 4 trades to get to $100 a contract, or $1,800 overall with 18 contracts. And we took a total of 23 trades in the room this morning, and that only got us all the way back to $100. We were up a bit at one point. On the NQ, we were positive at one point. On the Russell was the only thing that was really consistent all day. The YM, we were up, we were down, and then we ended up further down. They were up a little bit, then we're up a little bit more, then we're down, then we're further down, and we're further down. And that was the YM for us today. Didn't do crude or gold, and the ES, we just had a couple of break-even trades. So we ended up with $100 a contract. Now on the month, obviously it's the first day of the month, so it's $100. But on the year now, at $40,590, averaging $394 per contract per 2-hour business day. Over here, if you were to quit trading when you get your goal for the day and you were to add 1 contract per month, so far this year, you would have, if you added 1 contract per month, you started with 1 in January, you'd be at 6 now. In the 6th month of the year, you'd be at 6 contracts now. And you would have only had to work 36.6 hours, and you would have averaged $1,238 an hour. If you were to start it in January of last year, like I did, and you added 1 contract a month, now you would be at 18 contracts. We're in the 18th month of the 24/20 blueprint. We're now at $608,000. We're in the 18th month of the 24/20 blueprint. And so far, the same 36.6 hours, but we're averaging $6,123 per hour. Okay, $6,123 per hour. All right, that's it. Let's get into the trades now. Okay, the markets were a mess from the beginning today. The markets were a mess. Dwayne's gone over the big picture stuff, and I'll go over a little bit of it right now. But one thing that was really jumping out at me this morning was this right here. This inverted head and shoulder pattern that we had, this clear inverted head and shoulder pattern that we had here going with the NQ, and then it failed at the neckline. If it fails at the neckline, it's going to go all the way down here. Okay, that's more than likely what's going to happen, all the way down there. I was looking for a move down to here. You can see I drew that in. Drew that in at some point. I was actually looking for a move further down. I think down to here is where I was looking for. This inverted head and shoulder failure right here at the neckline, right at the neckline. Now, if we go back and look on the other side of that, I'm trying to go back and look on the other side of it, but it's not letting me. Okay, well, we'll come back to that. Anyway, the trades that we actually did do, let's get into those, okay? Hang on, hold that thought. Hey, that's something that is for this one. Okay, can go to YouTube here for a second. I'm on the questions out there too if you guys have any. And all right. So let's shrink this up and shrink this up. The trades that we did today on the YM, we started out over here. Okay, bring it back. There it is. All right, so our very first trade was right here on the YM. We picked up 2 ticks on that one. And then the next trade, we had a break even right there. And then we picked up 4 more ticks there to get us to +6. And we stopped out on that one. I should add my stop at break even, I think, on that, but we stopped out. And that put me at -4. And the next trade, it took us a little while. Missed all those really nice trades. And we got this one over here. Again, my stop should have been a break even, but I stopped out and I was at -14. And then the next trade, this one here, I didn't have a chance. The last 2, I should have my stop at break even, but this one right here, I stopped out and pretty much to the tick and then went down. So it was just a rough day trading. It was a rough day trading the YM for me today. You know, the markets, they were non-committal for the most part this morning. They seem to have really started to take on a direction after the morning session. But I think they're going to settle down here and maybe turn around. We'll see. I don't know. They've been back and forth. The only market that's been consistent today that did have follow through was this one right here, the Russell. Now, if I click here and I do Alt and back on that, we'll go back to the beginning. And here we are back at the beginning. Let's see. Here we go. All right. So the very first trade was right here on the Russell, and we picked up 5 ticks on the first one, and then we missed that. There was news that came out here at 9:45. We picked up 13 ticks on the next one to get us to 18, and then 16 ticks on that one to get us to 34, and then 2 ticks on this one to get us to 36. And then there was more news that came out at 10 o'clock, and we went from 36 to 41, so we had 5 ticks there. And then the next trade that we took, somewhere in here, we had one more trade. I don't know where it was, but we had one more trade for 11 ticks. That got us up to 52, and that's what we had there on the Russell today. But you can see every time I had a decent arrow here, we had good follow through. Almost every arrow had good follow through on it, and the Russell was the only market like that today. Even during the break here, we had decent follow through. The Russell was the only market like that today. The ES, we had 2 break even trades. There were a couple of nice blue arrows here during the break, but leading up to the break, there wasn't much to go on. We had the first break even trade was right there, and the second break even trade was right there. And that's all we did with the ES this morning. Okay, it was kind of rough going this morning. All right, the NQ now. The NQ, let's do this. I'll go all the way back to the beginning on the NQ. The NQ, of course, we had the majority of the trades, and we're back and forth on the NQ as well. Though it took a lot longer today to get stuff done on the NQ because the positive trades that I got were small. So like 4 ticks each. And except for one of them I think was more than 4 ticks. It was 8, I think. Something like that. All right, let's bring it down here. Now we started out with a break even right here on the NQ. Okay, and then the next trade we took was right here, and I stopped out on that. I should have had my stop at break even, but I didn't. I think I was slipping today. There's like 3 of them now that I should have had my stop at break even, but I didn't. All right, so we stopped out on the first one, then we got 4 ticks here to bring us to -16. Then 4 ticks here to bring us to -12, the 4 ticks here to bring us to -8. And here we went from -8 to +4, so we had a 12 tick trade right there. And then the next one we stopped out on right there. We stopped out again. That brought us down to -16, and then we had a +8 right there. That got us to -8. So the NQ was back and forth for us this morning too, just like the YM. And you can see that the the blue arrow right there gave enough to get the stop to break even, maybe take a little profit. Same thing with this one, but this one, it went down, came right back up, would have been a break even. This one right here, break even. This one right here, probably stop out to the tick if you took it. The markets just didn't have the follow through today. Again and again and again. And that was it. Anyways, we ended up with -8 on the NQ. So it was a lot slower and sideways, more sideways than we're used to having in the room today. What we did do, though, hang on, that's not what I want to see. This is what I was thinking over here. Let me see Bitcoin for a second. You guys are aware that there was some issue this morning. Whenever you get this exclamation point like that, a runtime error, there's a couple of ways to handle it. You can just decrease the look back, or you can just shut it off and turn it back on. Usually when you shut it off and turn it back on, it's going to recalculate everything and it'll be fine. Now, Bitcoin took a little bit of a dive in the last couple of days. And if we go back and look at the history of it, we're looking at it on a daily. Okay, go back here and look at the history of it. Right, so today it's up on the 30-minute chart. It looked like I thought it was on the daily. If you go back and look at the history of it, we had that blue arrow there, and it should go up and put in a new high right here. It should get up above that prior swing high, but it's going to take a while. The last time it went like this, it pulled back, and it took it a long time before it started to get up above there. So I was thinking another month, maybe before we start getting new all-time highs. We'll see what happens, but unless something else happens to make Bitcoin, to make people flood to Bitcoin, and days like today in the stock market could be that thing where the stock market it's questionable technology. This is the SPY. There's for those of you guys who want to go to what I'm hosting tomorrow at 3 p.m. If you go here to targetviewtrades.com, I'm hosting this again tomorrow at 3 p.m. And, last week at the end of the week, I released the mid-trend trade. As I was searching for a way to give you a warning for the mid-trend trade, I found a way to actually improve the mid-trend trade dramatically. So you can see right here, all these blue arrows are where you would get the warning, and then you get the trade. Okay, you get the warning, and then you get the trade, or you get the notice. Sorry, I gotta say notice, not warning. You get the notice, and then you get the trade. You get the notice, and then you get the trade. You get the notice, and then you get the trade. Notice and trade, notice and trade. So I'm gonna go over this tomorrow at 3 p.m. If you guys want to sign up for that, just go to targetviewtrades.com. Everyone is invited to sign up for that. Let's go back here. I am there. You can go here and see if anything is going on in here. We're in a no trade zone. We're in a no trade zone. In a no trade zone. So we really don't have anything happening here except the Russell. Again, the Russell is our thing. One of the things that I did today, because we're in June now, we're on 18 contracts now. All right, in here in the spreadsheet. See, this is 1800. Well, we've got the goal for the day. Everything is times 18 now. In the DOM, 18 contracts. So we're just 2 months away from getting to our 24/20 goal to have 20 contracts. And I want to see at the end of August, I don't know what the summer is going to be like, but at the end of August, this number right here is what I'm curious about, because we have full month now of the 18th, full month now of the next month of the 19th. So we have 3 full months of trading. And if the months are like this, that could be really close to that set-figure number. That's what I'm hoping for. But I'm not going to change anything that I do. All right. I was hoping that would be a kind of like a milestone with the 24/20 blueprint. But we'll see what happens with it. Okay, so we got out of the no trade zone here. We got out of the, well, we're still in no trade zone on ES. We're out here and we're out here. Now, I don't know where it's going to go from here. Of course, nobody does, but it's looking like it's going to sell off some. All right, I didn't bring up the question box. Question box. There it is. Is David Z in here? No, he is not. Okay. All right, sideways. We're just waiting. Does anybody want to see any symbols? Anybody have anything they want to look at other than what we're looking at right now? I'm happy to bring up anything you guys want to look at. YM, green short. There it is. Green short. Took it. Here we go. Stop should be 10 ticks away, and it is. Now, we're still in a lot of chop right here. This is really not the greatest trade because we're in a lot of chop. I probably should have had my stop at break even already if I'd gotten it at the right place, and I didn't. I got in way down here. Oh, we'll look for it. There it goes. All right, we're going to take that. 18, we'll lock in 20 right there. And we have our 30-tick target right there. So 20. Woohoo. All right, well, that puts us positive on the YM. That was nice. So that was our trade of the day right there. We're looking for this to pull back up and test the ribbon here. We're looking for all of them to pull back up and test the ribbon now. Okay, we're coming out of the overbought right here. It's gonna have a black arrow, but it's so close to the swing low you can't take it. Same thing here with the ES. Same thing with all of them right now. If they're coming out of the overbought, they're gonna have black arrows that you can't do right now. Okay. Black arrows that you cannot do right now. All right. So that and that. We might get something here on the NQ now. We gotta get into the overbought or hit the ribbon. Both the NQ and the YM. The YM is in the overbought, but it's too close to the swing though to give us a black arrow that we want. Same thing over here. We really want it to come off the ribbon on both of those. All right, there it is on the NQ. So get ready for it over there. And that black arrow is a little bit further away from the swing low, so that's a little more attractive over there on the NQ than any of the ones that would have triggered down here. Okay. You can still wait for it to hit the ribbon like it did right there and wait for that down close right now. All right, we might not get that down close. The green is getting really close to the black in there right now. See, if the black touches the green, you're not going to get an arrow here. It's possible you get a green arrow right now. It didn't pull back up to the prior swing high, which is over here. Yeah, there it is. It just did. That was too deep. Okay, so over here on the YM, it did pull back beyond the prior swing high, which is right here. So this is going to be an ugly green arrow here on the YM if it happens. In the YouTube? Okay, let me bring that up and go there and see. Hey, patient trader. All right, I'm glad you came back. I did get my internet fixed Friday afternoon. Can I show the same NQ15 range with target view charts? Yes. We just had a trade right there on the YM. Just let me show you that in just 1 second here, okay? Here, we'll go out here to this now. I don't know if you heard me talking earlier about the mid-trend trade stuff, and I made some dramatic improvements to it where you actually do get the warning ahead of time. My problem with it last week when I did the mid-trend trade was that you weren't getting warnings in time, but you can see right here without the mid-trend trade, you're still getting great indications right here. Short captured that one right there. This short here didn't go anywhere. That would have stopped you out. This short here, the stop, remember, is up here. It's up here. The prior bar is a stop, so that worked out great. I don't know. Let me just look at this to make sure I have everything going in here. I do. It's actually got the bias level on. That's why you're not seeing the long trades. Right? If you shut the bias level off, you'll see some long trades populate in here too. See the long trades right there and there and there. And here, another short trade right there. You see. What happened? Let me go over here. Is there anything specific you want to see there, patient trader? Josh, where's Josh's question? Am I missing it somewhere? Josh. Oh, there it is, Josh. Here it is. Josh, I don't know. I don't know how many people are trading, and I'm not trading 17. I'm trading 18 now because it's the 18th month. Yes. Yes. 18 months. 18 months. We're a year and a half right now. Year. Now, I'm going to throw the bias back on here because it was created for futures. Okay. But on patient trader, this is what it looked like this morning at the open. Okay. And let me see if I can shut off the mid-trend trade stuff. I'm not sure I can shut that off. I didn't have it completely coded. That's actually, you know what? I know I can. I can do it this way. There. Let's put the regular TV trades on here. I'll get rid of the mid-trend trade stuff right now. Okay, we'll put that on. We'll show the bias level. We'll show shorts, and everything else is good. Okay. So this is what it looks like this morning from the start. You had this long trade right here. Now, remember, if you're just trying to get your goal for the day, you got it on this trade right here, right? If you took this one right here, then you would have stopped out. The stop would have been right here. It would have stopped you out. Took this one right here, you would have gotten it back and then some. Took this one, you would have gotten it back and then some. This one, gotten it back and then some. Now, at this point, if you take this, and let's just say you have a 30-tick target on each trade, right? This is a 15 range, and this is the MQ. You're in here at 711. So it ran from 711 all the way up to 31. You have 20 points right there. 20 points, that's 80 ticks in that one trade. Okay, and on this one right here, your stop would have been about 30 ticks. And then on this one right here, 715, and it ran all the way up to 732, another 15 points, another 60 ticks right there. Even if you only got 30 out of this, and 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 because I have a 30-tick target on my NQ trades, I mean, that's by 9:45. And you know, the shorts are turned, well, the shorts aren't turned off. It's just, I have the bias on right now, so it's only going to show long trades above the 233 and short trades below the 233. So this is the first short that it showed right here, and that would have stopped you out. You know, it depends how you move your stop to break even, but it probably would have stopped you out. This would have been a break even. This would have been profitable. This could have been profitable or break even. Same thing here. This would have been profitable. This would have been a stop out. And now we're almost an hour into the morning. So you've had a bunch of opportunity to make money and be done if you wanted to. Okay. These, can I show the same NQ range with trading view charts, target view charts? Okay, yeah, I did that. Okay, so I'm going down to the bottom. Josh, just some morning trades. All right, patient trader, do you have any other questions about it? Do you want to see anything else? And Josh, yeah, I don't recommend anybody just go in there and start trading with 17 contracts. As a matter of fact, I highly recommend you do not do that. Do not do that. I don't even recommend you go in and start trading with real money. You have to be consistently profitable.
You got to learn the strategy first.
Yeah, you have to learn how to trade. before you start trading.
To do otherwise would just be financial suicide.
You must learn how to walk before you can run. You must learn how to crawl before you can walk. What most people do. But that's, I mean, you can see again and again in here. It's just given trade after trade. That's really nice. You know, you get your stop outs. Of course, you can have stop outs. That would have been a stop out, and you had a couple in a row. Right there, that would have been a stop out. That would have been enough for a break even. That would have been enough for a break even, enough for a break even profit. But you're gonna have stop outs. If you're just gonna take every single trade, that would have stopped you out. Then you gotta have the confidence to take the next one right after it. That would have been profitable. 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 That would have been a break even. That would have been profitable. 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 That would have been probably break even. No, that would have been profitable. It stops up here, so you wouldn't have stopped out on that. Profitable all the way to now. Okay. And that's the NQ. I mean, you can put it on whatever you want. You can put it on whatever time frame you want. And you know, this stuff in the middle right here, that's what I'm working on with this right here, so that you can have these opportunities in the middle. You know, all these ones right here, like, let me shut this off. You see right here, if you have, before you get an indication like this, if you have a bar, like a red bar on a blue background, you're going to get an alert or a notice that the next bar is probably going to be the trigger. The next bar is probably going to be the trigger. Even right here, you would have gotten a notice that the next bar could be the trigger. Actually, you don't have longs on, so you couldn't. Actually, no, because they're shut off right now, you wouldn't get that because you have the bias. But right here, you would get a notice right there, and right here, you've gotten a notice. Right here, a notice. Right here, a notice. Right here, a notice. On every one of these ones where you have the red on the blue or the blue on the red, before you get the actual trigger, you would have had a notice on that. Like this one right here, you wouldn't have gotten a notice, okay, because it was blue on blue and then just went to the trigger. This one right here, you would have gotten a notice. This one right here, you would not have gotten a notice. This one you would have. Most of them you do, not all of them, but most of them you do. And that's what I was trying to work on here with the mid-trend trade. These blue arrows that you see here, those are the notices. That's when it says, okay, it's just about set up. It's just about set up for the trade. It's just about set up for the trade. And then the fuchsia, that's the color name, the fuchsia arrow or the green arrow is the actual trigger. All right. And with this, the stop is just going to be a little below the bar that got you into the trade, because they should be pivot bars. Right? They should be the pivot bar. When you get one of these, it should be right there at the pivot bar, like that one and that one and that one. And that one and that one and that one. And that's, you know, it's all stuff I was working on that. You know, I put a lot of time into it. Let's just say that. And I'll be talking about that tomorrow. If you haven't signed up for the webinar I'm going to host tomorrow at 3 o'clock, go out here to targetviewtrades.com and sign up for the webinar right here. Okay. And I'll be going over that some more then. All right. You're talking about this being for NinjaTrader? This will not be on NinjaTrader. Never. NinjaTrader can't do all the same things as that. Okay, but our regular indicators are for
I was
NinjaTrader.
talking about the My Trading IQ.
Yeah, you have that there.
If you want target view trade, you're going to have to get a trading view account. Yep.
Yes. Yes, but back in here now, well, even this stuff, you know, the NinjaTrader looks like this. This is kind of what it looks like. We had this huge thing. This isn't a live, obviously, thing. Everything else is, but that's not. Let me show you this here. This is what NinjaTrader looks like. Okay, this is what, well, actually, Ninja's got the full ribbon. I don't have the full ribbon turned on right there. Let me turn the full ribbon on, and then you'll see. But you know anyway, I mean, you've taken the trial 100 times, you know. But It's well, I'm sorry, I didn't mean 100 times. I might have exaggerated there. I didn't mean to say 100. You've taken the trial before. I didn't mean to say 100. Sorry about that. That was an exaggeration on my part. I'm sorry about that. But here, this is what it looks like on NinjaTrader and on DT Pro, and this is on a 5-minute chart. Okay, this is on a 5-minute chart. And I'm sorry, I didn't mean to exaggerate that much. I was not paying attention. Don't be insulted by that, please. But you do know what it looks like. But this is what it looks like on NinjaTrader and on DT Pro. All right, with this, it's different here because you have to draw trend lines. You have to pay attention down here to the slingshot. You have 2 lines in the slingshot. All this stuff is simplified when we went to TradingView. You don't need to draw trend lines. You don't need the bar colors. You don't need 2 lines down here anymore because all of that is on price now. Down here you have everything separated. You got to have 4 lines visible to take a trade. No matter what you do in here, you got to have all 4 lines visible. And you know how we countered that with TradingView? We had the outer bands. And down here, the cycle portion of this is your long-term trend. And the green line down here is your short-term trend. And you know how we got rid of that? The outer bands and the context. So when you're looking at this right here, the outer bands right here, they tell you what your long-term trend is. They tell you what your short-term trend is. The context tells you when you've pulled back too deep. Okay. I told you I was exaggerating, Josh. The context tells you when you pull back too deep.
But hey, check this out. The FDIC just announced that 63 lenders are on the brink of insolvency. $517 billion in unrealized losses hit U.S. banking system as FDIC warns. 63 lenders on brink of insolvency. That's guys.
Are those all in Silicon Valley now?
Guys, no, they're no. Guys, if you never see the movie, It's a Wonderful Life, I want to check it out.
So no, Josh, that's what I thought you were getting at. That's why I wanted to spell it out. That's what I thought you were getting at. I wanted to show you that we don't have this because we can't have this over there. There's things that I did with TradingView that I can't do with DT Pro and NinjaTrader. I know, I just can't do it. They don't have the technology. Okay, so we're not going to be able to put it over there.
But what you're showing on the screen right now, that is available on Ninja.
No, not everything. The context's not available. The outer bands are not available. The no trade zones are not available.
True, but the basic thing where you take a trade, I mean, it's there.
So. Yeah, we take a bounce off the ribbon and all that. That is all there. But I mean, what you see right here, for $30 a month, you can get the charts and the data from TradingView, real-time data and the charts for $30 a month. So, and they actually just had a great sale last weekend that I signed up, extended my annual for. They have them again every now and then. They have these great sales, and I think if we go here to getting charts, I don't know if they have it going right now, but they did have it just the other day. And this super sale in here where you could get all this stuff for like, I don't know, $10 a month or something like that, or $5 a month. $10 a month, I think is what it was. Maybe 12. I don't know. This one right here, it was really cheap. But yeah, it's worth checking it out, Josh. Okay, it's worth checking it out. Just go here. I'll give you the link. Okay, this was going through this webpage, but you don't have to go through this webpage. Just go to tradingview.com/pricing. Right, if you get the essential, that's going to give you 2 charts and it's $12.95 for the annual. Pay for the annual. Otherwise, it's $14.95, and the data is $7. So for $21, you can have this. This will get you all 4 charts that I have. This is what I use. You can see that's what I use. But the plus for $29.95 plus the $7 would be $37. Would get you enough so that you can see all 4 charts like this with the data and all that stuff. So no, we're not going to be doing that on NinjaTrader. And we're not going to, I mean, you know, as much as we've
Ninja doesn't make it
used Ninja
possible
over the year,
with their outdated technology.
they don't. As much as we've used Ninja over the years, it seems like, you know, when they went to NinjaTrader 8, they put so much effort into NinjaTrader 8, and they made things flashier and shinier, but they didn't actually add new.
They still can't put Humpty Dumpty back together again.
Yeah, they didn't expand their object model for people who want to build things in the back end. You know, they were trying to attract retail customers more than attract people who, you know, wanted to have trading tools and stuff like that. I'm not exactly sure what their plan was, but I don't know, and I don't know if it worked. I just know that, you know, Ninja 8 was 3 years ago when they came out with that. Almost 4 years ago when they came out with that, and there's still things that they haven't fixed. Simple things too. It doesn't matter. But all right, so times I've gone right over. Sorry, and all that. I went right over my time. I'm sorry about that. Does anybody have any more questions? Josh, please don't be offended by me saying 200 trials. I didn't mean that. I didn't mean that. Okay, one trial. Not 100, but I know you're taking the trial, so you know what I was talking about. The NinjaTrader stuff is NinjaTrader stuff, and we're not going to be able to put this on Ninja. We do have, Josh. Have you seen this strategy in here? This button panel strategy. Have you seen this? You just hit buy, and it puts the order on for you, and it keeps track of where it is, where it needs to be with regard to the bar and the bar size. So you don't have to keep moving it around. Have you seen that? It seems like it's been a while since we last talked. You see, it puts the order on for you, and then you can manage it here. You can manage it on your chart if you want. You know, you can do it however you want. Oops. You can manage it on the chart. You can manage it on the DOM. I don't know if you saw that part of it. But that is a feature. If you haven't been around in a while, you haven't seen that. And it seems like it's been a while since I talked to you. Okay, so you did see that then 6 months ago. Okay, all right, well, it's 11:33, so I got to wrap it up. And, oh, you didn't see that 6 months ago? Well, we had it 6 months ago, I think. Well, I can show it to you again. Well, if it's 6 months, you can sign up for the trial again. All right, sign up for the trial again, and we'll see you in the room tomorrow. So, in that, let me show you how to sign up for the trial. If you go here to mytradingiq.com and you click on this purple button right here, that is going to sign you up for the trial. Okay. If you sign up for the trial, there's no credit card required. It's going to bring you to this registration page. We're down here. All you ask for is your first name, your last name, your email, your phone number. If you have NinjaTrader, give us the machine ID. Do not give us the NinjaTrader ID. Give us the machine ID and we'll set you up. If you have TradingView, give us your login ID, not your email. your login ID. If you have both, give us both, and we'll set you up with both of them. Okay. That is all you have to do to take the free trial. Right? If you want to take the free trial, that's all you have to do. Okay. And that will get you active in the room with us again. Okay. Yeah, well, we're not going to have all the stuff that we have in here on there, Josh. But as I showed you, this is for $37. You can have exactly what you're looking at right here, and for for more, you can have all the way out to 8 charts if you want. But I mean, you don't need that. We probably don't even need the premium anymore. The premium, when we were streaming live with TradingView, you had to be premium to stream live with TradingView. I think you have to be premium to have access to certain things too that we do have access to. So we do need the premium, but you don't need the premium. You think it's exponential? It's not really. All right. Well, that's it. Just sign up. All right, I'm going to pass it back out to Fabulous Phoenix, Arizona, because I do have another appointment coming up. And I will talk to everyone later or tomorrow. If you need me, everybody knows how to get a hold of me. Email support@cfrn.net, support@mytradingiq.com. That's how you get in touch with me. All right. Thank you, everyone, for coming. And Dwayne, you have it back in Fabulous Phoenix, Arizona, Studio A, overlooking South Mountain already.
Yeah, recap of the morning session.
25 minutes, 4 trades, $1,800.
Good job.
Thank you.
All right. One last look, guys. We are off the low of the session. We've pulled back to the 24% fib retracement. Price is now trapped between support at the 24 and red and falling overhead. So we're off the low of the day. We're off the high of the day. Okay, how we close today will be very important. We caught a 100-point bounce off the 38% fib retracement. Huge. Absolutely huge. And we caught the resistance right where we expected it, red and falling. Zone to zone to zone to zone. To become a member, go to mytradingiq.com. 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. If that's you, you've come to the right place, because we will actually teach you how to trade. Not only do you get 2 hours of live training in an interactive group setting every trading day, you have access to one-on-one private mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you also receive the Logic 247 alerts, the concierge trade alerts, weekly trading zones, and you're able to attend the members-only workshop on Thursday night, every Thursday night, 8 p.m. Eastern. It's everything a trader needs, all under one roof, one low price. And on the Logic 247 alerts last week, again, we had 0 stop outs for the entire week. And that's kind of a big deal considering we're in week 305. There may have been one other day in there over the last 300. There's actually more alerts than that because that was the Thursday morning recap or the Thursday night recap. So let me go find the right one. There we go. So what we had last week, week 304. Now we've published over 16,800 individual handcrafted alerts over the last 304 weeks. We've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure in a very simple process we teach all of our passport holders. Last week was a great week. We had a total of 42 alerts, and that was with Monday being a holiday. 4 never triggered. We had 38 actionable alerts, and nothing stopped out. So that's one for the record books. Joseph, I don't know that it's a first. It could be. Seems like there might have been one other week. At the most, it's happened twice. I'm pretty confident on that. Yeah, thanks. Okay, guys, let's wrap it up. You know how to become a member. If you have any questions, call 949-42-EMINI. Email support@cfrn.net. And learn how to trade. All right, good word for the day. What are you hiding behind? 1 Samuel 10:22 said, he is hiding among the baggage. When Samuel went to present Israel's first king to the people, Saul was discovered hiding among the baggage. The Hebrew word for baggage symbolizes the self-imposed limitations that hinder you from tackling the job God appointed you to do. Things like this. Number 1, feelings of inadequacy. Saul's first response when he learned he had been chosen as king was, am I not from the smallest tribe of Israel, the least of all? That's 1 Samuel 9:21. When you fail to figure God into the equation, you will always feel less than. Instead of focusing on your weaknesses and inabilities, concentrate on the incredible greatness of God's power. Ephesians 1:19. Number 2, fear of what others might think. Proverbs tells us fearing people is a dangerous trap. That's Proverbs 29:25. And Saul fell into it head first. When Samuel confronted him for failing to obliterate the Amalekites, he replied, I was afraid of the people and did what they demanded. 1 Samuel 15:24. God's word assures us, I will never leave thee nor forsake thee. So we may boldly say, the Lord is my helper. I will not fear what man shall do unto me. Hebrews 13:5. Once you take hold of that truth and act on it, you'll find there is nothing to be afraid of. And number 3, being overly pragmatic. The Bible says a double-minded man is unstable in all his ways. James 1:8. And Saul fit the bill to a T. When he didn't hear from God, he took matters into his own hands and consulted a psychic. Friends don't let friends call psychics. And after promising not to harm David, he repeatedly hunted him down. Adaptability is commendable, but God requires consistency and commitment. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.